just wanted to go over something here that I've been back testing and something that I've been speaking about for a little while now, regarding the way I trade and obviously basing it on higher time frames and getting that sort of CRT or 1, 2, 3 pattern involved with your trading. So this is something that I've just found when going over doing some back testing. Okay, so I'm going to start off here on this daily time frame, and as you can see, we are coming up to the 1 a.m. 1 a.m. time in New York, which is about 6 a.m. UK time, and we start London session at 7 a.m. UK time, so that would be 2 a.m. New York. The reason I'm on this time frame is because I'm showing it based on the 4 hour, and it will make sense in a minute. Okay, so obviously this is your Asia session 4 hour candle here. Okay, so you've seen we finished bullish. Doesn't really matter regarding this trade, but in general, we're going to dive really in depth about how these 4 hour candles are sort of the key to the trade and using it to work your way from a daily time frame all the way down to your entry. Okay, so what do we see here? Well, we can see that we had this bullish push up, price has reacted up here, and we've had 1, 2, 3, 4 bearish days. Okay, so that leads us to believe that on the Monday we probably will see some sort of move up. We have this FVG. Okay, so if I pull these out, okay, so we got this here, we can mark that as an FVG. Okay, and then we just show that so that it's very clean and clear. So we have this bearish PD array, okay, on the daily time frame. So we know now that on the Monday, we're looking for price to pull back into this, okay? So we're still bearish because we've closed below the previous day's low on the Friday, quite low below it. We've moved up on the Monday, which is expected to tap into this bearish FVG, okay? So going into this London session, or the London 4 hour candle, which will start 1 hour before I personally start trading London. So, and the reason for that is I'm going to dive into real detail about this 4 hour candle. So we're going to go starting from 1 a.m. So the 1 a.m. is where the new 4 hour candle is going to start, okay? So this is that area. So if I skip it to the 2 a.m., which is the London session, we'll see that we have our new 4 hour candle has started, okay? 1 a.m. it opened, it's gone lower, and we haven't yet tapped into this daily FVG, okay? Or if we have, it's been very, very slight, okay? So we're expecting London, where we see, as we know from experience and from listening to ICT when we did used to study his sort of style, London will usually create the high or low of the day, okay? This is a little golden nugget of a tip. It happens very, very often. If you go back and look at it, it happens so often. London will create the high or low of the day. So with that in mind, we're bearish still. We expect this daily FVG to be filled on the 1 hour, on the 4 hour, sorry. We have no reason to be expecting any bearish price action just yet. This 4 hour candle finished very bullish. You have this slight 4 hour FVG just here to be tagged. You have this one up here potentially, might be too far from price, but you've still got these areas that you're targeting. Now, if we jump onto this here, and you can see this is our 1 a.m. candle, okay? You can see 12 closed above. Again, we have no reason to be looking for lower prices at this moment in time. Now, if we just pull up on here, we pull up this sessions indicator, we can show where our Asia session levels are. Okay, so if we just pull this off and we put in, I think they're correct at the moment, 8 till 12. Oh, that's not till 12. Just quickly edit that. Okay, so we got 8 till 12, which is where our Asia level is. Okay, so it's up here. Now, what did I just say about London? We want to see London create the high of the day. Okay, so 1 a.m., the 4 hour London candle has just had 1 hour of its candle already. Okay, and we've pushed down and put a low in. So going into 2 a.m., what do I expect to see? Well, we are bearish on the day, so there's nothing for me at this moment in time. But we want to see price take out this high. Now, this is how I'm looking at the CRT or the 1, 2, 3 at the moment. For any candle to show on the 4 hour, for any candle to show that we're going to sweep and close back within the range, we want to see it do that on the 4 hour candle. When it does sweep on the 4 hour, so it pushes up from here, we push up here, I want then to be looking on the 1 hour chart to see if price has swept and closed within its range. Now, let me just leave that on for now. If I push price forward one more hour, we'll see that exactly that is what happens. Okay, so you can see this was our high. This was the level we wanted to see get taken out, and you can see that exactly the 2 a.m. candle. So once London starts, we open, we push higher into this FEG, which you can see just here. Okay, yeah, it's very small, but it doesn't matter. You have relative equal highs with these two Asia levels from the previous day and Friday and current Asia level. Price sweeps it and closes back within. So what does that mean for us? Well, at this moment in time here, we've now swept and closed above the previous candle's high. Okay, so that would equal us to be bearish anyways. But what have we also done? Well, we've swept liquidity here, okay? And we've also, as they are pretty much relative equal highs, we've taken this and we've also taken this. Now, it's very slight, but price has swept this area. Now, all I really focus on is this candle. Now, price has swept up, closed back below within the range. Now, this is where the CRT or the 1, 2, 3 pattern, whatever you want to call it, comes in. And this is where I'm trying to base this 1 hour chart and use it overlapping with the 4 hour to get the higher probability trades. Okay, so now when we look onto this 4 hour chart, we've now tapped into this bearish FVG on here. And we've also tapped in quite nicely to the bearish daily FVG. What have we done it in? We've done it in London. First 2 hours of London's created the high, which now leaves us our perfect sort of entry time zone. Between 2 and 4 a.m., you want to be looking for your entries. Why do you want to look for your entries between them times? I've explained it quite a few times already, but if you haven't seen them videos, I will show you again why I believe they're the most probable times to be getting entries. So we know on this 4 hour here, we've got, sorry, this is the daily. We know on this 4 hour, which is this candle here, we've opened up, we went lower, okay? But then now we've gone higher. So this is sort of, look at how that candle's sitting at the moment. It's sort of, this is where price is sitting. So this is how we are. This is not really anything you want to be involved in. But it doesn't really matter because the time hasn't come for us to enter our trade yet. What has happened is if you ignore this little move down that it made at the start and you base price off where it is now, price has had that open, it had that little bit of a low, price has now made its high, and we've closed back below on the 1 hour as well. So the range has been closed within in the 1 hour. We've now swept the previous candle's 4 hour high, which is perfect. So now all I'm looking for is price to absolutely obliterate to the downside. It has absolutely no reason to continue to the upside as we've swept the previous 4 hour candles high. We've tagged into a daily FVG, a 4 hour FVG, and on the 1 hour, this is where the trade's made. Okay, we swept into this 1 hour FVG. We've taken all of the close range liquidity that we can see off the table. There's no reason for price now. That is closed back within the range. So it swept the high of the previous candle, closed within. There's no reason for price now to have any reason to move up. So now we've got this daily bias, this 4 hour candle bias. So we've got the 4 hour candle running into the FVG, but don't mind that. All we're looking for with the 4 hour, because we're bearish, is seeing a sweep of the previous candle's high. This is now going to be our CRT. We're going to enter, basing it off this candle, then going lower. Why do we do that? Because we know the 1 hour's done everything it needs to do. It's closed within the range. We know that going into the 3 a.m. candle, we can look for sells. Okay, so let's make sure this is only on for this, and we'll go down to the 5-minute chart. Now, the 5-minute chart, what can we see? Well, this is our Asia level's been taken out. Okay, if we start to move price forward on the 5-minute, we know where our level is that we want to see broke. We want to see this area down here, market structure shift. Okay, if we get that, then we know that price is willing to go lower. And as you see just here, we sweep this market structure level, very clean, pushes with displacement to the downside. Now we're very, very confident that price is willing to go to the downside. We have the higher time frame with us anyway, so we have no reason to believe it's going to go back above the highs. We can take our entry based on this 5-minute FVG. Stops above London high, just in case. It may sweep this. It probably won't, but you don't want to be taking any unnecessary risk when you're trading these sort of trades. Now you can target your 2R, which is what I would trade. Okay, so I will put that on just because that's how I trade, and I will always take a 1 to 2R. Okay, and you could mark out the previous 4-hour level, which would be here, but your overall draw would be down here, this swing point. Okay, there's no reason why a price, if it's going to continue bearish, it wouldn't go down there. Now, this may not all happen on one trade, of course. It'd be very unlikely to see it all play out like that. But if you look, we're about halfway down the daily range as well with our 1-hour entry. Happens to be just above the current Asia low. You also have this swing point down here. So if we go back to that 5-minute chart, and we'll start to show exactly what price does, okay? Obviously, this is in hindsight. I found this back testing and took this. So I'm sort of going over, I sort of know what's going to happen, but it's just to show what we're seeing and why it becomes higher probability with what I've just explained. So you've got the 5-minute price tag straight in. Now, this is what you want to see when you're getting into your entries. Bearing in mind, if you have a look at the time here, we're at 3:20 a.m. This is what ICT will call the silver bullet. It's what I find, like I said, the highest probable times to be getting in a trade is when you're halfway through your 4-hour candle. So you have the first hour or the first 2 hours of your 4-hour candle, when you're bearish, should be creating the high. If it does it in the first hour, lovely. If it does it in the second hour, it's still fine. You've got 2 hours then, or an hour, which normally when they do create on the second hour, you get a really big push to the downside quite quickly in that third hour of the 4-hour candle. So we're on the third hour of the 4-hour candle now because we opened at 1. We had a move higher. Okay, we can look at it here. We had opened at 1 o'clock, moved higher at 1 o'clock, sort of finished around about the same level that we opened at, just below. Then we move higher at 2 and close below the high at 3. We then open at 3 o'clock, which you can see here. We open, make a little wick, which will be on the 1 hour, the wick of the 1 hour. We then make the distribution and market structure shift to the downside. Price tags in at 3:20, which is about optimal prime time to be getting into your trades. And then we start to see the move to the downside. Now we tag in, price moves. This is now opening up another FVG. Price tags that again. Now this is a perfect sign that you're on the right side of order flow when you're seeing your new bearish PD arrays, if you're bearish, getting respected and they're being tagged just. This one got tagged really perfectly, took 50% of the level as well, perfectly respected it below the high, and then absolutely obliterated the downside. And you can see here we tag in, continue to the downside. Price runs and runs really fast. This is what I was trying to get at when I was saying, if you open up at 1 and you make a high, but it's not closed below, don't panic and think your trade's not done. You're coming on at 2 anyways in London. You don't have to be in a trade the first hour you're on the chart. You can expect price to just sort of play around on that first hour of the 4-hour candle. Then you see the move happen on the second hour, which is the 2 till the 3 a.m. Long as you're 3 a.m., long as you're in your trade between 2 to 4 a.m., you've got high probability that you're going to be on the distribution leg of the 4-hour candle. Now, this is the 5-minute view of this, okay? As you can see, the 1 to 2 trade absolutely obliterated within minutes. Literally, what was that? So we went in at 20 past and we're done by 50. So that's 30 minutes and you're done, okay? 1 hour chart now, if we take this market structure shift off, look how that 1 hour candle's moved. Now, why has it moved with such aggression? I'll explain it again. It's very, very simple. This 1 hour candle is closed below the previous candle's high. It swept all of the liquidity it needs to above price within reason. It's not going to start taking out this and this level here because it doesn't really need to go that high. When you look on the 4-hour chart, you can start to understand why. It's got this FVG here. If price is truly bearish or bullish, depending on what trade you're taking, but this example, if price is truly bearish, it's going to respect the PD arrays. You go to the daily as well, and this is why the daily time frame should be the area you're basing your trade off. We know just by looking at this chart, we've had 1, 2, 3, 4 consecutive down days, selling off on the GBP JPY pair. Why would anybody be trying to long anything above here? Yes, there's an FVG up here, but does it need to go there? No. Once we're in this FVG, You have not entered anything until that's happened, and you're still not entering until you've had a confirmation that price is changing direction again, which is what we did on the lower time frames. Price tagged in, showed us it wanted to change back to the downside, which we expected anyways, and that's how you get your trade. When you look at the 4 hour chart, this is where the money is, and this is my whole point of why I'm making these videos, is to try and explain to myself for my own knowledge more off, but for everybody watching it, when we see this high swept on the 4 hour chart, okay, so you come on at 2 a.m. New York time, so that'll be 7 a.m. in the morning. You can watch for the first hour. If that first hour sweeps and on the 1 hour chart you close below, which is what we do, okay, so you have it here. We close below price. This is the first hour I would have been watching from 2 a.m. till 3 a.m. So this candle here, price sweeps, closes below. That is the instigator then, which is this wick. We've closed below. I'm very confident then that price is going to be pulling into at least this FVG. Now, why does this FVG look like it's going to get overran? Because overall bias is bearish. There's no reason, there's no FVG here on a daily. Price wants to continue lower and it wants to take out this low down here. You don't even need to worry about all that because you're already done for your day. Price has literally obliterated to the downside. Potentially, most likely going to take out this Asia level. I can't even remember if it does, but I'm pretty sure it does. I'm pretty sure it actually goes all the way to the drawn liquidity. Let's push it forward. Yeah, so price absolutely continues and obliterates to the drawn liquidity, which is a 1 to 4 trade. Now, you're talking about extreme amounts of money if you can be pulling these off on your lives. Okay, what else do we see? Well, you can see the buy side and then the sell side. The sell side is extremely, extremely quick. We know exactly why because I've been over it already. The 1 hour and the 4 hour are your medium time frames where you're going to be taking your sort of bias to the next level. You already have your higher time frame bias based on the daily or the weekly. You know the direction you want to see price go. You're then using, so again, just showing it, which it did literally hit the draw on the same day. We have this daily FVG. Until price tagged in here, we're not even bothered about this pair. We'd be watching something else. Once it tags in, your alert would go off. You'd be having eyes on this chart. Price tags in. You already got your bearish bias. You then look on the 4 hour. Have we had a sweep of the previous 4 hour candles high because we're bearish? Yes, we have. Now that's your first confirmation. Okay, can we move down? We move down to the 1 hour. What we're looking for on the 1 hour is price to close below the previous candle's high. This is your confirmation that the lower time frames may potentially have your entry. So I trade market structure shift and the displacement to the downside because we're bearish, and then identa, which once we've had this confirmation on the 1 hour, we can go down to the 5 minute. And long and behold, we have the market structure shift with a 5 minute entry. Price tags it, zero drawdown, and absolutely obliterates. Again, you miss this first trade, no problem. You're still valid to enter here. Price enters this FVG and absolutely continues to the downside. And like I said, even if you missed this first setup, you can easily take this setup. Okay, this is even more high probability because you already know price is in the bearish order flow. As you gain confidence, again, you still got your 1 to 2R more than comfortably. Okay, once you gain confidence in trading like this, you will understand that once you see this market structure shift, price has no reason to go back up here. You have all your higher time frames, your 1 hour, your 4 hour, and your daily chart to show you where price is going. Okay, this is a really, really good example and something that there's a lot of information in there. I would 100% take your notepad and go over it again. But it's just something that is so overpowered. It's so key to reading the charts. As long as you have a higher time frame bias and then your medium time frames is in your 4 hour and your 1 hour aligned together, if you have them both overlapping, price moves exactly how you see it move here. Okay, really quickly to the downside. It has no reason to go higher and it absolutely obliterates to the draw. Okay, so really, really nice trade. And yeah, just something that I came across when I was backtesting.